Good morning, Trinidad and Tobago, and welcome to the Bourse Report. This week, we review the most recent quarterly results of Massy and Nell, two stocks which are of particular importance as they may offer a glimpse to investors of the effects on the broader stock market of a recession driven by lower energy prices. Let's now take a look at their results and their respective outlooks. And turning to our first graphic, for the financial quarter ended December 2015, Massy delivered earnings per share of $1.38 versus the $1.48 recorded in the comparable period prior, a decline of 9 cents or 6.1% from the first quarter of 2015. Massy's revenue for its first quarter declined marginally from $3.14 billion to $3.09 billion in the first quarter, a decline of 1.6% or $49 million, while profit after tax fell $9.1 million from $155 million to $146.3 million. Switching to our second chart, which looks at revenue by segment, we note that Massy's largest segment, integrated retail, would have increased by 2.4% and accounts for about 60% of total revenue, while revenues from its second largest segment, automotive and industrial equipment, declined by 3.9%. The insurance segment registered the highest comparable increase, climbing 39.3%, while energy and industrial gases declined the most by about $104 million, or 25.7%. Looking ahead, the effects of a weakening TNT economy and other operating jurisdictions are likely to affect Massy's largest three segments: integrated retail, automotive and industrial equipment, and energy and industrial gases, which collectively make up about 80 to 90% of total group revenue. With respect to integrated retail, recessionary pressures, together with the widened list of vatable items, could negatively affect demand for Massy's products within this segment. The automotive and industrial segment, which accounts for about 20% of revenue, may also experience challenges attributable to weaker demand in a recessionary environment. Adding to challenges for this segment will be the ongoing depreciation of the TT dollar, which may place some pressures on operating margins of this and other segments reliant on imported goods. Perhaps economic reality is already setting in, as seen in our third chart, which illustrates a slowdown in new car sales for the first time since 2011. And here we can see in 2014, new cars sold were just about 19,100 units, while in 2015 it declined for the first time in about 4 or 5 years to 18,800 units. And switching quickly to our next graphic, at a price of $59.47 and a trailing PE multiple of 9.2 times, Massy is trading at a discount relative to the current market multiple of about 11.8 times and that of the conglomerate sector of about 12.2 times. Massy does offer investors an attractive trailing dividend of 3.5%, the highest among its sector peers. The stock's relatively attractive valuation, however, is tempered by a challenging economic environment and expected declines in its three major operating segments. Having considered these factors, Bourse places a neutral rating on Massy. And turning our attention quickly to Nell, for the 9 months ended December 2015, Nell delivered an earnings per share figure of 41 cents, about 38% lower than its EPS in the comparable prior period. Nell's fall in earnings was mainly attributable to a lower share of profits received from investee companies, and for the period, Nell's share of profits recorded a sizable drop of about $150 million, or 40% from $371 million to $220 million. Nell's energy sector assets, through its holdings of Tringen, NGC LNG, NGC NGL, and PanWest, would have all recorded reduced performance. Nell's outlook, of course, will be largely driven by its energy holdings. And with regards to Tringen, unscheduled plant interruptions and lower ammonia prices have all contributed to weaker performance by Tringen, with ammonia prices having fallen 40% from US $580 per ton in 2014 to about US $350 per ton in December 2015. It's unlikely then that share of profits will recover significantly in the short term. A similar story unfolds for both NGC NGL and NGC LNG, with prices of propane, butane, natural gasoline, and LNG all experiencing some weakness. At a current price of $14.79, and if you could pull up the graphic once again, Nell is trading at a trailing PE of about 27 times, significantly above the market PE positive of about 12 times and the non-average banking finance sector PE of 14.5 times. Nell's trailing dividend yield presently stands at a healthy 4.2%. While offering an attractive dividend yield, the stock is trading at multiples considerably higher than both the sector and market PE, and on this basis, Bourse does maintain its sell rating on Nell. That's all for this edition, folks. Have yourselves a wonderful investing week. For more information, you can visit our website at www.bourseinvestment.com. Give us a call at 628-9100 or email us at invest@boursefinancial.com. This has been the Bourse Report.